Stocks are in a bear market. That means the good ones and the bad ones are going down. Today, I'm going to show you 5 oversold stocks that I think are worthy of attention. What does oversold mean? Well, according to the Big Money Index, you guys know that I love data. I like to track where the big money is going. And so the BMI is looking at numbers of stocks that are going up with big volumes and down with big volumes. Now, what's really cool about right now is we are at oversold. That green line right there, that's 25%. That means over the past 5 weeks, 75% of all of our signals have been for sale. And you're like, well, why is that important, Luke? Well, typically we don't stay oversold that long. And in fact, the last time we went oversold was 2 days before the pandemic lows. And then you can see the BMI literally went straight to overbought because money rushed in. And look, it's not just the pandemic where that happened. Let's just go back previous years. Look at 2014. You can see right here we went oversold. It was near the market low. Same thing here in 2015. Here it was February 2016. We had a couple of times where we went oversold in 2018. That's the pandemic. And then here is where we are now. So taking all of that in together, it's telling you that this is probably an opportune time to be looking for high quality stocks on sale. So here's a few stats about the BMI once it goes oversold. So since 1990, it's only happened 20 times. Well, this would make it 21 times. We tend to stay oversold for about 3 weeks. Markets tend to trough out 2 weeks later, and the forward returns for the S&P going back since 1990, 16% gain in the S&P 500 a year later, and a 29% gain for the S&P 2 years later. So this is a very bullish signal. What I'm going to be looking for in the coming weeks is when that BMI starts to turn higher, that could indicate that buyers are starting to step in. So you guys always remember that none of this is personalized advice of any kind, just trying to show you how I make sense of the crazy data right now. And now we're going to get into some great oversold stocks. So the number one oversold stock that I'm looking at, it's an industrial name. It's Old Dominion Freight Line. It's a big trucking company. If you got to move freight, anything large, ODFL is the way to do it. Now, what's really great about this stock is it has been getting a lot of sell signals. So look, this is how our data looks for opportunity. What's getting bought and what's getting sold. Lately, a lot of selling has been hitting this stock. Now, if we just go back historically, I want to show you what's really cool about this. So clearly there's some times when it's getting bought, sometimes when it's getting sold. Let's just remove those buys for a little bit. What do you see? Typically when great stocks, right, fundamentally superior stocks get sold, it can be near-term lows. And that's what we're seeing right here. I'm not saying that this is the low, but I am saying that the stock is getting sold and it looks like it might be overdone. Over to the right, this is our top 20 report. So this means that if this stock ever was a top 20 stock in our data, it gets one of these blue lines. So this is a multi-year chart. That's a stairway to heaven. It means that this is probably a healthy company under the surface. So let's keep going. Let's look at some cool fundamentals really quick. And you can see there's a lot of good on the left side. So 1-year sales growth, 30%. That is very strong. 3-year EPS growth is 24%. The 1-year estimated EPS growth is a positive 7%. So I like it when the expectation is that the company is going to grow. A couple of other things. The stock has free cash flow of $662 million. So for a market cap stock of just about 28 billion, that is pretty positive. Its forward PE is 21. We can see over here, the technicals is where it is getting a low score. One of them that is kind of poor right now is that the stock is below its 50, 100, and 200-day moving average. This stock could be oversold. The number 2 oversold opportunity, I want to look at a great name that has a big, rich history, and that is Mastercard. Ticker is MA. This is just one of those fabulous credit card companies. They have just done so well over the long run, and chances are, if you're watching this, you might have a Mastercard in your wallet. So let's look at the big money data. Chop City, I mean, the stock really has no trend other than trendless. So literally you get selling here, you get buying there. It's hard to make heads or tails over the short run. But again, let's just look historically. We see that there's a lot of buying, there's a lot of red, but let's remove the buy signals just for a moment. And what do you see? Just like the last chart, typically when high quality stocks are on sale, they can bounce. So if the BMI starts to bounce, we get a relief rally. I would expect Mastercard could bounce from here. Over here to the right tells us that this has been a high quality stock for years. It has been on our top 20 list dozens and dozens of times. That is a good sign. Means it's probably got great fundamentals. Their 1-year sales growth for Mastercard is 23%. This is the most important. The 1-year EPS growth estimate is a positive 20%. Look, they can do numbers like that. The stock is probably going to head higher over the long run. They have a forward PE of 33 times, which is a little expensive in this market, and it has a 200% debt to equity ratio. Want to add a couple more fundamentals that are interesting. They've got a free cash flow of almost $9 billion. That is a lot of cash. They also repurchase their stock from time to time. So this is a company that is doing things that help shareholders. And obviously, if they're getting penalized anywhere, it's really on the technical side. Year to date, the stock is down 3%, but in this market, that is some outperformance. I think the stock is potentially oversold. So the number 3 oversold opportunity is Home Depot. Full disclosure, I own this in personal and managed accounts. And this is a great consumer retail name, home improvement. They've got so many stores. They're fun to go into. If you need to buy an appliance or do anything around the house, chances are you can figure out whatever you need at Home Depot. And look, this was a darling earlier in the year, had a lot of big money that was going into the name, right? And then obviously in November, that's whenever the market started to sell off. And now we're starting to see sell signals just like every other stock out there. And we've seen a ton of retailers guiding lower, but recently Home Depot actually had decent guidance. Wall Street was worried about a lot of stuff for Home Depot, but I think they came out better than expected. Let's just remove those buy signals for a minute, and we can see that typically strong stocks, when they get sold, they tend to bounce back. So we'll see if that happens with Home Depot. But again, I'm not a day trader. I'm looking over the long run, and we can see that it has a lot of the quality buy signals over the past few years. So let's see what the fundamentals and technicals look like. And you've got pretty decent scores fundamentally. The 1-year sales growth is 14%. They're expected to grow their EPS 6%. That's solid. Has a profit margin of 10.9%, 0% debt to equity, and it's got a forward PE of 17 times. Add to that free cash flow of $14 billion. This is a very, very solid stock. It's got a forward yield of 2.7%. So if you're looking for dividend growth, this is a great name. And where is it getting penalized? It's on the technicals. We can see that the stock is down 4.7% over the past month, and it's below its 50-day, 100-day, and 200-day moving average. It's possibly oversold here. The number 4 oversold opportunity is a semiconductor firm, Lam Research Corporation, ticker LRCX. Full disclosure, I own this name in personal and managed accounts for a long time. And listen, they are one of these big semiconductor manufacturer companies. They just have a lot of great fundamentals. They are growing their dividend, and they have come under a lot of selling pressure, just like a lot of other semiconductors, right? They're worried about GDP growth. When everybody's worried about a recession, they will sell semiconductor companies. But you know what? If a lot of those fears are unfounded, this could be one of those stocks that could bounce if we get any type of rally. So we could see all of the sell signals over the past year. I mean, the stock was well over $700 at one point, and now at its low, it looked like it broke $450. Let's look over here, the top 20 report. This stock is an outlier. That means that it has been on this report dozens and dozens of times. And let's see why. We look under the hood. Fundamentals are very strong. The 1 and 3 year sales growth are double digits. They are expected to grow their EPS 20%. It has a profit margin of 26.7%, forward PE of 15, very, very solid. Let me also add, it's got free cash flow of $3.2 billion. It's got a forward dividend yield of 1.2%. Their one-year dividend growth is 13%. Where is the negative? Well, it's on the technicals, as you can see over here. It's been 129 days since the 52-week high, and the stock has been clobbered. It's down 33% year to date. This stock could be oversold. The number 5 oversold opportunity, I am looking at Nike. I want to think of names that have done well historically. When times are tough, I want to focus on best of breed. So the ticker is NKE. Full disclosure, I own this in personal and managed accounts. If you don't know about Nike, they've got shoes, athletic wear. I'm wearing some of their shoes right now. They have great products. They've been around a long time. And listen, there was some buying that went into the stock last June, but since then it has been a lot of selling. I think people are worried about the recession. They are worried about commodities and rising food prices and how that is going to affect them from buying discretionary items. But what do we know about high quality stocks? Typically, whenever they get sold, you will see big money rushing into them shortly after, because listen, when quality goes on sale, that's where big money managers tend to put their money, right? They want to buy quality on sale. Top 20 appearances, yes, it has been a top 20 stock multiple times. So that tells us that under the hood, this is probably a solid company. So let's look at it. One-year sales growth is just under 19%. That is strong. The one-year EPS growth estimate is 23%. That is fantastic, right? So if you're growing or estimated to grow in this tape, that tells you a lot of people are very bullish on this company. Now, it does have a forward PE ratio of 29 times. That is a little bit expensive in this tape, but get this, they do repurchase their stock. So last quarter, $1.2 billion worth. Free cash flow of $5.9 billion. It's got a forward yield of 1.1% and one-year dividend growth of 12%. We can see that it is getting penalized on the technicals, right? That's because it's down 35% and it's got a relative strength of just 33. So this looks like a high quality stock that is potentially oversold. So look, markets are oversold, but that can be an opportunity. Remember, focus on high quality companies, those that have big cash flows, big histories of great performance. And if they pay a dividend, that is an added bonus. Please remember that none of this is personalized advice. I just want to help you use data to make you a better investor. Don't be thinking next week, next month for your stock returns. Think 1, 3, 5 years out. That is where the opportunity is. It's over the long run. You guys hang in there. I'll see you next time.